Hey guys, it's Downtown Josh Brown back with another edition of What Are Your Thoughts? I'm here with Michael Batnick as always. We're going to play our favorite game. Michael has no idea what I'm going to ask him, and I have no idea what he wants to ask me about. Play along with us in the comments below. We love your participation. Let's get right into it. Okay, Mike, I want to ask you, I mean, this is like obviously what I had to lead off with. Everybody's trading. So you had a really funny encounter with your plumber this past week. I read your post about it, but we didn't get to talk about it. So you have somebody in your house fixing something. He sees you looking at a screen with the stock market on it. Then what?
He goes, "You do stocks?" So let me just set this up.
You do stocks? I do.
It was probably it was 8:30 at night. I'm writing a blog post titled "Why Everyone's Trading."
Okay.
And the angle that I was going for was all of the conditions could be in place with the free commissions, the Portnoy effect, the quarantine, the $600 stimulus. All of that could happen, but absent the most important condition of stocks going absolutely apeshit, people wouldn't be trading. So I gave a list of 170 names in the Russell 1000 that have at least doubled from their low. So that was the original premise of the post, okay?
Wait, slow down. So there are 170 stocks in the Russell 1000 that have 100% plus gain on the year.
No, from their bottom.
Oh, from the low. All right, got it.
From their respective low.
Okay.
So that was the post that I was working on why everyone's trading. And then literally this man walks into my office and says, "You do stocks." So I turn to him and I say, "What do you got?" He takes out his phone.
Wait, you were ready for a lightning round at 8:30 at night?
So excited. He's so excited. He shows me his phone and he says, "What do I do? I've got 130 grand in the market and I have absolutely no freaking clue what I'm doing."
Right.
And the names are exactly what you would suspect. Tesla, Nikola, I think Apple and Amazon.
Okay.
And I would guess that he started with 50 grand. I didn't ask, but.
All right. So you're making the point like, of course everybody's trading. Why wouldn't you be trading? You have stocks like Wayfair that are up 835% since March. Tesla quadrupled. Wendy's up 211. Wendy's.
So the thing is, a lot of these names are, at this point, household items or brand names that are directly in our life. Peloton, Slack,
Grubhub,
or not Slack anymore, but
Chipotle. Everyone knows what these are.
So these are the names you know, and they're going bananas.
Yeah.
So this is, it's not a mystery. This is why everyone's trading. But I can't believe that I had like my very own shoe shine moment. And I told him, I was like, no offense, but I read him the quote and I was like, "You're my shoe shine boy, and don't take this the wrong way."
All right. Well, what's the quote? Who said this? Rockefeller?
Joe Kennedy allegedly said this.
Yeah.
Something along the lines of, "When the shoe shine boy starts giving you stock tips, something at the end."
Well, that's when you want to start selling, because people are too excited about stocks. All right.
So I was talking about this with Ben yesterday, and he's like, "We've had anecdotes like this over the years," and I was like, "Not like this. We've had the Mila Kunis one, we've had the Aaron Rodgers VC one, the Mike Tyson crypto brokerage or whatever. We've had all of that, but now it is everybody."
All right. So I had that moment. I was like scrolling through podcasts in the investing category. I was looking for something in particular, and I came across the Robinhood Snacks podcast. They call it Snacks. So I guess it's like meant to be like short little vignettes about stocks, like or little like headlines, and then like a snarky or a silly comment. No offense to Robinhood and the two young men that are doing this podcast, but I wanted to blow my brains out. Like I wanted to log in and sell everything, just like your experience, because it was just the dopiest. Like, it would be like they would name a ticker symbol, they would say like what the news story is, and then they would use like some like slang shit that like not even millennials, like Gen Z slang, or like a lyric from a rap song to just like tell you what's happening with it. And they did, I heard like 3 tickers, and I was just like, who is this for? Like, because I remember being 22 years old and starting to learn about the market. I didn't want to be pandered to with like nursery rhymes. Like, I wanted the real shit. I wanted to read and listen to people that really were experienced and knew what they were talking about. I don't even understand who the audience is for that. And the joke's on me. They probably have 9 million, subscribers. But I'm just saying, like, that's where we are now, where it's like it became a game.
I want to make 3 points. One, not every market top needs a retail frenzy mania, but that's what we have today. And in my opinion, every retail, I guess it's not opinion, throughout the course of history, every retail frenzy has ended badly.
Oh yeah. No, I don't care. I'm not even afraid. I said on my podcast last week, it's a bubble. Whatever it is.
Hang on. Right. Number two, it can pop if this is a bubble, and it can be contained to these names. It doesn't have to drag down the entire market.
Agree.
Right? So this is not like a sell everything thing. It's a, hey, DocuSign, Shopify, Spotify. It's not even a commentary on the fundamentals of those companies. I don't know anything about those fundamentals. The point is, when stocks just indiscriminately, maybe it's not indiscriminate, but when a group of stocks just go vertical, that tells you all you need to know. And the third point was, we spoke about this after your podcast last week, which is excellent on SPACs. You made a really insightful point that people think that it's retail that ends this thing, that it's a bubble and there's nobody left to buy. But what actually happens is that Wall Street responds to the demand with excess supply, and that's how it ends. And that's sort of where we are today.
So the stocks that you named as being up 170%, like Zoom, Roku, Beyond Meat, Zillow, DocuSign, we could go down this huge list. What will happen is that Wall Street will furnish more versions of those things. And they'll say, this is the next Zoom, this is the next Grubhub, this is the next Roku, and they will force feed us like they force feed geese in order to turn their livers into foie gras. They will fucking drown us in supply, and it's supply that puts the top in to these types of retail frenzies. So I absolutely think that will be the case now, and I think the boom in SPACs, just these piles of cash that aren't even a company yet, like that is the sign that we're getting extremely close. And ultimately, there become so many new issues and secondaries and more shares available that we drown in them. They saturate, they soak up all the demand, and then you get an oversupply, and that's when things tip. So we'll get there.
There's only so many plumbers. All right, so sticking with this, on Thursday, we've got Facebook, Apple, Amazon, and Google all reporting earnings. These companies represent $5 trillion in market cap. I think they're 40% of the NASDAQ 100. They're expected to do $115 billion in revenue. Two more stats I want to give before I ask your thoughts. So we've got, according to FactSet, a quarter of all S&P 500 companies have reported as of Friday a 42% blended earnings decline, which is obviously awful. If that stood, it would be the worst decline since Q4 2008. However, as we know, it's all about expectations. And according to JP Morgan, 80% of companies have beat expectations. What's sort of wild about going into this is that these companies have pulled back, these four names, but barely. They're all still within 5% of their all-time high. So I don't even know what I'm asking you, but we've got them on Thursday. What do you think?
Let's unpack that. First of all, it's nice that we have Super Tuesday now every earnings quarter. Like we have this moment where it's almost like it's the only day that matters for large cap growth stocks. It's all the names at once. But the second thing is the 42% decline in earnings that are expected for the quarter matches up very nicely with the 35% decline in GDP. So it's almost, the symmetry is almost perfect. And much like nobody's going to get worked up about the decline in GDP, regardless of what it is, because we're already so far into the new quarter that we know it was temporary for most areas of the economy. People are going to treat this quarter's worth of earnings in the same way. Expectations are going to be the only thing that matters. And then you're going to hear analysts ask questions of CEOs. CEOs can't answer. They literally, all they can do is say cautiously optimistic, because How are you asking somebody what the fourth quarter is going to be like? We don't know if another 2 million people are going to be infected between now and next week. We really don't know. So CEOs are going to say, well, we're planning for the worst, hoping for the best. It's all nonsense is my point.
Well, Liz Ann Saunders did a post over at Schwab. She said that nearly half of S&P 500 companies already withdrew full year earnings guidance.
Yeah, why would they keep it? It'd be madness.
Right.
Imagine... Just think about it as a private company. Forget you have 5 million public shareholders. Let's say these guys were sitting in a room with the 6 shareholders that own the company. Would they be like, yeah, here's what's going to happen in the fourth quarter? No. They would be like, look, here's the deal. I don't know anything. I can only tell you what I'm preparing for. So it's obvious that what's happening in the overall market is about sentiment, not about fundamentals. And I don't see why that would change just because we get last quarter's earnings and maybe updated guidance about next quarter. But if you're a seasoned CEO or CFO, you're not giving anybody real guidance, or anything that you're saying forward-looking is so wrapped in caveats that it's, to my earlier point, it's basically meaningless.
What do you got?
I want to ask you about the U.S. dollar. So the dollar versus the index hit a 2-year low over the last week. The dollar versus the euro has been the real highlight of what's happening in Forex this summer. It just appears that, and as a backdrop, the United States as a country is on its way toward joining a fairly exclusive club. We're going to be 101% debt to GDP by the end of 2020 based on current projections. So Japan has gotten there. Italy has gotten there. We are on our way. And so that sell-off in the dollar, I think, is going to be one of the biggest drivers of asset class returns in the second half of this year. It's a radically different environment than what we've had for most of the last 4 years, where the dollar has been very strong. And I think there are big implications, but what do you think?
There are absolutely big implications. So dollar has been strong for years now. I think it really started going nuts in 14, 15, and we've sort of plateaued. But yeah, it's been strong. So it's certainly been a detractor for U.S. investors in foreign and international stocks, obviously, having an enormous impact on commodities, gold and silver in particular. How is it affecting Bitcoin? I mean, maybe that's tied together. So yeah, I think that.
Hold on. Let's back up. Gold just hit an all-time high, decisively. Got above 1,900, I think close to 2,000 today. And that's the highest level in 9 years. And the flows, Jason Zweig did a big post over the weekend. The flows into gold ETFs are enormous again. So that's a mega trend, and that's being driven to a large extent by deficits in the dollar.
For sure. Balchunas said, and maybe, so that's probably what drove it. And then what's driving it now is just the piling on. So Balchunas said that GLD, SLV, and IAU were all in either the top 5 or top 10 in weekly flows. So he said it's gone from strength to just a full-on frenzy.
Okay. Now, when you look at the price of gold versus 2011, the previous peak, so we're back at that level. But then you look at the mining stocks, they're not even close. They're not even close.
Because they probably fell. Did they fall 90%?
I think maybe the junior miners might have, but they're not like their annualized returns. Like any way you want to slice it, there's a ton of ground that could potentially be made up by the mining stocks if the price of gold is at least steady in the high 1900s, 2000 area.
So Newmont, for example, fell 78%
from peak to trough. When did they bottom in 15?
That's the only mining stock in the S&P 500, gold mining stock.
Well, yeah, they're tiny. So gold mining stocks as a percentage of the S&P are less than 1%.
It's probably like 1 basis point. It's literally
it's as tiny as you could be. Is my point.
By the way, GDX fell 81%.
Well, let's be clear though. GDX is made up of international gold miners, many of which trade on U.S. exchanges, but. I think that's why in the S&P, there's not a larger concentration in gold stocks because think about a lot of the mining giants. They're just not U.S. companies.
I feel like the dollar is like the ultimate story. Gold too, but why is the dollar falling? Is it deficits? Is it how we're handling the virus? Is it investors
all of those things
forward looking on the economy? Like it's all of those
things.
Dude,
the election. We might have an election where the incumbent loses and doesn't concede.
That should be bullish for the dollar.
No.
All right. So sticking with this, I wanted to ask you about, there was a chart from Bank of America, highest 90-day return ever. I'm sorry, this goes back to 1992. Highest return over a 90-day period for an equally weighted portfolio of bonds, stocks, bills, and gold. It looks like and it's not even close. You could say that it's coming off the lows, and yeah, 2009 was the second highest, but we've dwarfed that. It looks like close to 20%. The previous high was 13 or 14.
Wait, for what period of time?
90 days.
Over the last 90 days has been the best performance for a
An
diversified...
equal weighted portfolio of stocks, bonds, gold, and cash. A quarter in each.
So, okay, got it. So if you did a quarter in each of the 4 major asset classes, you've just seen the best 90 days ever.
Which is interesting because we know cash is zero. So this is primarily stocks, gold, and bonds.
Right. It's a shame because I keep listening to all these guys that are telling me to short everything and go to cash.
I'm sorry.
I think something has to give, though, because I would love...
What?
Maybe we should do this. Maybe we should look at what happens after. I would love to know what the next 90-day period looks like after the top 10 or the top 5 90-day periods like this. I would just be very curious. We should do the work. My suspicion is that bonds went out, but I'm just making that up. I'd love to know for sure.
All right, I'll look.
I want to talk about baseball, and not because of the sport itself, but because of what it signifies. I actually think that what happens in the next 2 weeks with Major League Baseball and the decisions that are made are some of the most important decisions for the reopening of the U.S. economy in the second half of the year that we're going to see. Like, I think it, pun intended, it's the whole ball game. Here's what I want to ask you about. So baseball restarted, and 4 days later, they had the Marlins outbreak. So there were 14 players on the Marlins that contracted COVID at some point in the course of playing. So now they were playing at Philadelphia. So they don't leave the city. There's the whole team quarantine, awaiting more tests. Now the Yankees are supposed to go to Philadelphia yesterday and play. So that gets postponed. And then whoever was supposed to play the Marlins, I think maybe Baltimore, that game doesn't happen. So now you have this chain reaction, but the commissioner did not cancel the season. He's like, look, we were planning for this. We have a protocol. We're going to watch this play out. We're going to see what happens, how many players contracted, how many negative tests, and then we're going to try to play through this. That's what every school, university, government employee, like that's what everyone should be watching, because if it works, if baseball can kind of plow through this and then there's no more infections and they can contain it, I think it's a really important signifier to every other segment of the economy, not just the upcoming NFL season, but like the real economy. Like, hey, we can contain this thing when it sparks and we can plow through and we can get kids back in school. I think it's super important, but what do you think?
You said it all. I agree. I got nothing left.
That's it? I did the whole thing? You're not what? Yeah. Wait, so you're not? I know you're not like a huge baseball fan.
I'm gonna repeat what you said. I agree with you. I agree with everything you just said.
You're not watching any of it. Like, you're not dying to watch sports.
Not baseball. Don't care.
Really? All right.
Don't care.
Not even like throwing a Yankee game, just out of curiosity. You're not missing anything. Care. It's weird. It's weird as hell.
All right. There was an article in the New York Times about what's going on in Midtown Manhattan. So you and I went last week or the week before, and there's not much going on.
We were there on Thursday last week. Yeah.
Midtown Manhattan is full of tourists, which obviously aren't there, and it's full of people going to offices. Very few people live in Midtown Manhattan. From what I understand, if you're in places where people live, you wouldn't even know that there's a quarantine, aside from the fact that obviously there's restaurants outside, so that's where there's masks, but it's busy. Where people live, it's busy. Midtown Manhattan is a ghost town.
Yeah.
So this article, this reporter spoke to a hot dog vendor who used to sell 400 hot dogs a day. He's now selling 10. Listen to the stat. Rockefeller Station subway, okay? Last year, at this time...
It's like 50th. It's like 50th and 6th Avenue.
Yeah, it's right by Radio City. Yeah. It's right in the heart of things. Yeah. Last year, there were 62,000 MetroCard swipes on a day. This year, it's down to 8,000, which is an 87% decrease.
Sick.
87%. So my question to you is this. What do you think is in bigger trouble in Manhattan specifically? Commercial real estate?
Yes.
Or residential? Residential?
I think they're inextricably linked, but I would, if you ask me, you have to have a portfolio of one or the other right now. I'll take the residential. I can't imagine things ever going back to the way they are, not because we're going to live in fear of viruses, but because we've just proven that the knowledge economy does not require anywhere near the amount and the cost of office space in places like Manhattan. We know Google just told its employees they're staying home till next July. That includes huge amounts of people working in Google's offices in Manhattan. They have like a
So let me
city
ask you
block in Manhattan.
Yeah, they do. Let me ask you this. Do you think that, and I'm not talking about 30 years from now, do you think that in major metropolitan cities, San Francisco, New York, that home prices peaked, whatever, a year ago, and they're going to stay there? Like, we're not going to surpass that peak for 3-5 years. Do you think that's reasonable? I mean, if people aren't going to be going into the office, why do they need to be in the city?
I think culture will come back. I think restaurants will come back, and Broadway and concerts and sporting events. And I think there will always be an appetite on the part of young people to live in downtown areas and be somewhat near work. And I still think that major companies are going to have a presence in cities.
No doubt. But my question is, do you if let's say that there's a 12% decline in home prices?
Okay.
Do you think we will see new all-time highs in the next 5 years?
It'll be if there is, it'll just be driven by like inflation and devaluation of currencies. It won't be driven by there's this uptick in demand. It's just never going to happen again. And we might have overbuilt luxury and high-end apartments. I mean, we definitely did. So that's already an issue. They were throwing up towers just to sell empty apartments to Chinese millionaires who were trying to get their money out of the country. Like they weren't even building some of these things for people to actually live in. They were building these safe deposit boxes in the sky for oligarchs, and all of that's over. Or at least for the foreseeable future. So I think we're over office spaced and we're over apartmented in places like New York City. And I'm comfortable saying you've seen a peak for many, many years to come, to answer your question. Let us know what you guys think, though. Most importantly, we love your feedback. Go ahead, jump down in the comments. Tell us your thoughts on these topics. What?
Do I need a toupee?
No. And stop calling Mike bald. I think he knows. Like, I think he's...
No. I'm okay with being called bald. This person said I look strange. And it was no offense. No offense, but you look strange.
I think you're beautiful. Even though
Thank you.
Even though you look like a grown-up version of your baby, I still think you're beautiful. All right, listen, let us know what your thoughts are. Michael or my personal appearance. We do our best. We're trying our best. Go ahead and subscribe to the channel if you haven't already. Tell your friends. We're blowing up. We want them to be a part of this. Give us a like if you like this video. If you don't, that's okay too. You can keep it to yourself. No one will be mad. And we will see you very soon.